CZ just had a very ugly interview with CNBC where they ask him about liabilities, where he can't answer questions, and where he avoids questions altogether. This is right after yesterday he talked about how 99% of people will lose crypto storing in self-custody. I'm going to go through this. I've been talking about Binance a lot recently, and I'm not trying to spread fear, uncertainty, and doubt. The fact is that your crypto just really isn't safe on exchanges at this point. There's a lot going on, and there's a lot of fear, uncertainty, and doubt about Binance specifically, and maybe for good reason. So I'd rather tell people about what's going on and have them have the ability to pick whether they want to self-custody or move it over to a hot wallet, then have another exchange go down. And to be clear, I don't hope Binance goes down, but they are looking a little bit sketchy. I also want to talk about a few other things in crypto here today. If you don't mind, hit the subscribe button if you want to follow videos like this in the future. I appreciate that. There's also a link to Margex in case you want to trade a small percentage of your crypto. That's underneath the video. Now, I did say in the title to take your coins off Binance, and that's not because Binance is definitely going to go down, but at a time where exchanges are dropping like flies, CEOs are having a hard time answering questions, which we'll see here in a moment. It seems like the best time to self-custody, and there's really no downside to it. Assuming that you can write down words and you can keep them in a safe place and you can send crypto to a wallet, you should be in a good place to self-custody. Now, of course, there's a little bit more that goes into it, but I think that's probably a better solution than leaving your crypto on exchanges and just playing Russian roulette with which one's going down next. So there are a couple different parts of this interview that I want to cover. I couldn't find parts of the interview online yet, but Meet Kevin has it in one of his videos, so I'll be playing those portions of the video where CZ's speaking. So let's start this from the beginning here.
We want to be transparent. We want to set the golden standard for reliability, solidness in this space.
So do it. Would you be able to handle it if somebody asked you for $2.1 billion back? Would that be okay? Would you be able to still withstand things?
We're financially okay.
Including you have $2.1 billion to give away. If somebody came to claw that back, you'd still be fine?
We'll let the lawyers handle it. We are financially strong.
So right away, she asks, are you able to repay $2.1 billion? She says this because they apparently got some money from FTX and forgot about it. According to CZ, they forgot about $2.1 billion. They have about $60 billion worth of assets on the platform, but they forgot about $2.1 billion that they got from FTX, and she's asking, hey, are you going to basically give that back? Or if the lawyers call for it, are you going to be able to withstand that $2.1 billion? And you have to realize that $2.1 billion here is much different than a $2.1 billion withdrawal from the exchange because of the fact that they can't just let the coins go out like they would with a withdrawal. They have to take some of their money and give it back, some of their actual profit, right? So that would be quite difficult, I think, for any exchange. But Binance, if anyone can do it, it's probably Binance, right? They're making a lot of money. But keep in mind, too, that's a significant amount of money just to claw over. That's a significant amount of profit that they have to give up. Now, let's rewatch that for just a second.
Able to handle it if somebody asked you for $2.1 billion back. Would that be okay? Would you be able to still withstand things?
We're financially okay.
Including you have $2.1 billion to give away. If somebody came to claw that back, you'd still be fine?
We'll let the lawyers handle it. We are financially strong.
So he totally dodges the question as well. He does not say whether they would actually be able to handle a $2.1 billion loss from this, basically having to give up $2.1 billion. And he says that they're financially strong. So he does not straight up answer. And he also says they'll let the lawyers deal with it. Now, I've talked a lot about Binance recently. There are some questions over who actually owns a company, how to serve them papers, and just because they have such a weird, convoluted ownership structure. Now, a weird ownership structure sounds similar to FTX, so just be careful there. Now, let's move on to the next part.
In terms of the credibility of Binance, you disclosed that Binance holds about $60 billion of crypto assets. But thus far, you haven't disclosed your liabilities, and I wonder why that is and whether you will.
Yeah, so we are working with the firms to do the audited financials, liabilities, etc. Very simply, Binance does not owe people money. Binance does not have loans from other companies, from other funds. We just don't have it. You can ask any fund in the ecosystem. You can ask any VC. We actually also do not have VC investments, so we don't owe anybody any money. And we also do not have loans to other people that we depend on for our next payroll. So we are very simple, very self-contained type of organization, and we manage our cash very simply.
So they say that they don't have any liabilities, but they do have possibly a $2.1 billion liability with FTX. So keep that in mind here.
Don't reveal every problem. So,
No, but an audit from a Big Four auditor would reveal that, CZ. If you could get a Big Four auditor to say that, if you're saying that some of them don't want to work with you, that raises questions too. They don't want to work with you because you don't have the files and the data that would make them feel comfortable signing off and giving that stamp of approval?
Actually, many of them don't even know how to audit crypto exchanges. They don't really when they audit, they're very used to auditing a firm.
Coinbase has a Big Four. Coinbase has a Big Four auditor.
Actually, I don't look at Coinbase. We don't really look at.
I think so, though.
I don't know the details.
And they do have a Big Four auditor. They have Deloitte. So the fact is that they don't look at Coinbase, even though it's one of the largest crypto exchanges in the world, and they actually are able to perform audits. And this has been the main concern that I've had with Binance. They say that they don't have any liabilities, but they cannot prove it, right? They cannot prove that they have zero liabilities. They can't prove that they don't take customer funds and go and leverage it or trade it. They say that they are one-to-one backed, but you could have a one-to-one relationship where they still have it, but they're using it in their own funds or to push up certain cryptos or to, backstop BNB, right? Because BNB's barely fallen throughout this entire bear market, down less than Bitcoin from the high. So I just wanted to cover this interview. I think that CZ definitely avoids some important questions, definitely makes some weird statements that a Big Four accounting firm would not be able to show what Binance wants to show, and that they don't know how to actually audit Binance. I think that they could probably handle it. They could give us more than what Mazars gave us with just the Bitcoin reserve, right? Or Bitcoin versus Bitcoin liabilities, Bitcoin assets versus Bitcoin liabilities. So I think that Binance really does have to show more than they're showing right now. Otherwise, I am a little bit concerned if they cannot actually go through an audit or will not perform an audit. I realize that would be intensive, but it would provide a lot of clarity on their business. Now, moving on to a big crypto mining company. You say lose 1.7 billion on 519 million in revenue, and this is basically talking about Core Scientific. They did a SPAC, and just last quarter they lost 435 million on 162 million in revenue. And it's lost 1.7 billion in the first 9 months of the year on 519 million in revenue. Now, there is some news that they might be bailed out a bit by one of their creditors. This is the financial services firm B. Riley, and they offered Core Scientific a $72 million financing deal to avoid bankruptcy and preserve value for Core Scientific shareholders. Now, the company itself is worth about $140 million right now, so they're basically offering them financing for half of their market cap, which is significant. They have $42 million in loans already to B. Riley. In Core Scientific's last quarterly report, filed on November 22, they said that they did not have enough cash to get through 2023. And they say the reason for this is because of, one, the extra electricity costs, and also because Celsius was unable to repay a $2.1 million loan. And this is part of the reason for them being low on cash. Now, keep in mind, $2.1 million is so little compared to how much they've lost. When you consider they've lost $1.7 billion throughout the year, and they're citing a $2 million loan, that seems unlikely to me that that's the reason why. We're talking about a 1 to 1,000 ratio there. So I think that they're just in trouble because of their own mismanagement. Even the company that's offering them credit said that they mismanaged and that they grew way too aggressively. And they kind of gave a scathing report or assessment on Core Scientific here. They said that they had an aggressive, ill-conceived strategy to continue to build power facilities and expand miners while never selling Bitcoin on hand and never hedging prices. Now, I've been saying this for a while that we have to watch Bitcoin miners because a lot of them most likely will go bankrupt. And a lot of them have put themselves in bad positions. So unless they continue to dilute shareholders, and assuming they're able to do that, or they continue to get higher and higher interest rate loans while Bitcoin mining is becoming less and less profitable, a lot of them won't be able to make it out, right? I think you want a company that has as strong a balance sheet as possible if you're getting into crypto miners, but right now is a very risky time. So we might have some of them going bankrupt, selling some of their Bitcoin miners at a discount. The hash rate comes down. There's maybe some fear, uncertainty, and doubt about that, or it actually helps the other crypto mining companies become stronger because they're becoming more profitable. There are more Bitcoin to go around per block mining reward. But right now is such a scary time. A lot of them have already shed their Bitcoin, which is good for the Bitcoin price because while they do have to continuously sell their new Bitcoin, a lot of them don't have a bag to dump on the market like they used to. A lot of them are running pretty lean in terms of how much Bitcoin they have right now and they're holding on to. But be on the lookout for this because it is going to probably get worse for a lot of these Bitcoin miners. Now, let me know what you think about all this underneath the video. I'm not trying to spread fear, uncertainty, and doubt about Binance, just trying to give you the facts and give you what CZ just said. Thank you so much for watching. I appreciate it, and I will continue to update you on Binance and everything in crypto. Thanks again, and I'll see you in the next video. Bye.